September CPI report could be putting the Fed's next decision in limbo. The overall print coming in hotter than expected as shelter prices rose, though the core number matched estimates. And moments ago, Boston Fed President Susan Collins said today's CPI report is a reminder that restoring price stability will take time. Joining us now is former Fed Governor Frederic Mishkin. Frederic, welcome. What do you make of this CPI report? The market seems to still expect we're not getting a hike immediately.
Well, I think that's probably right, we have some conflicting things coming in. The Fed still has not been successful in terms of achieving their objective, and that's really a big concern for them. However, the markets have finally recognized that the Fed is actually serious about controlling inflation, and they're going to keep rates high for a long time. I think that's a good thing. And the result is that long-term bond rates have gone up, and that's a tightening in financial conditions. So given this sort of data that's coming in, which, inflation numbers sometimes look good, but, they're still not quite on the path that the Fed needs to achieve. The economy is a little bit strong. But on the other hand, there is a tightening of financial conditions, and that means that things are pretty up in the air for the Fed. I think the important aspect of this is that the Fed is committed to keeping rates high for a long time. And I think that's what's really important. And the markets have finally figured out that the Fed is serious about that. And that can get the pressure off the Fed.
So how should we factor in these weak Treasury auctions, given the Fed is saying that they're watching the impact of higher yields and it might prevent them from hiking further?
Well, I think the issue here is that when the markets finally recognize that the Fed is going to do it keep rates high for a long time, that's reflected in long-term interest rates, and that's what we're seeing now. There are also some other issues in terms of actually this sort of turmoil in our government doesn't really help. Government shutdowns, the inability to get our fiscal situation in order. This also impacts long-term bond yields, and that again can cause a tightening of financial conditions. So I think that we're in a situation where the Fed can wait to see how the data evolves. I think that's an absolutely appropriate thing for them to do right now. And we'll have to see what happens. The Fed's on the right track. They successfully have gotten the markets to understand that they're serious. And I think that's a very good thing.
So I'll ask you this. So war in the Middle East now, a legislative branch that's not functioning. What are the signs, if there are going to be signs, that the economy, the market is being affected by that?
Well, look, there are crazy things going on all over the world, and even crazier things going on in terms of our politics in the U.S. And this doesn't help. It creates a lot of uncertainty. I think that's actually an issue that it could affect the economy at some point, and the Fed is well aware of that. Uncertainty and policies which are not that effective do make people concerned. And in fact, they may cut back on spending and so forth. So the Fed has to wait and see on this. And we'll have to see how things actually play out in this regard. Clearly, the world is not in a great state right now, and that's not a good thing for the economy.
So energy prices, discretionary spending, are those the areas where you would look?
Yeah, I think again, both the war in Ukraine and also the recent events in the Middle East are not very good for energy prices, and that can impact the households. And also, there's an issue about whether, in fact, the good times are going to keep on rolling, given all of these crazy things that are happening. So that's clearly something that the Fed has to worry about. But on the other hand, the economy has been much stronger than the Fed expected. So, we're living in interesting times, as the curse says. And then you have to watch the data very carefully and keep track of it. You never get it perfect. It's very tough for the Fed to engineer a soft landing. I'm still doubtful that they'll be completely successful at it. But on the other hand, I don't see really bad times or a serious recession developing, even if a recession does occur.
Interesting times indeed.